Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and today we're gonna go over what I consider to be one of the best traders. His name's Jesse Livermore. What he did is he was a trader in the beginning, trading like in and out, and then he eventually started looking at the big trends. Basically what we're doing with commodities right now. It's the exact same thing. And what he decided is the short-term trades weren't making enough money. You have to get the big trends right. And what he realized is that he made a lot more money trading or investing in the big trend. So you identify the trend, put money in it, ride the big trend all the way up until the trend changes, and then you sell out. And that's how you make a lot of money. He was one of the most wealthiest traders in the world, I think probably ever, but he did win and lose his entire wealth, I think like 2 or 3 times, and then I think he ended up committing suicide in the end, so it wasn't a pretty picture, but I think some of his quotes or his sayings are quite valuable, the things that he said as a trader investor. So I'm going to go over some of those quotes. I'm going to go over a quick little thing of kind of who he was. And I'm going to show you a couple of things. So this one's going to be about Jesse Livermore, who was one of the best traders. So Jesse Livermore was an American stock trader. He is considered a pioneer of day trading and was the basis for the main character of Reminiscences of a Stock Operator. I read that book, a best-selling book by Edwin. I don't even know how to say his last name. It's obviously French. Not even going to attempt it, but I'm going to give you some quotes here, and they run very similar to what I say most of the time. You watch the market leaders, and you want to invest in the market leaders. So find your sectors, find which ones are the leaders. That doesn't necessarily mean that it's the biggest companies. What it means is that you want to see which ones are leading the pack. Who's breaking out first, who's making the biggest moves, and you want to get in those market leaders. Who would be a market leader in uranium? I would think NextGen is one of them. I think Encore Energy is. And then I'm hoping that Deep Yellow becomes more of a market leader. What has happened in the past will happen again. This is because markets are driven by humans and human nature never changes. And that's why I do technical analysis. That's why we look for patterns. These patterns repeat over and over and over because of human nature. It was never my thinking that made me the big money for me. It was always my sitting. That's when I say do nothing, sit, wait. That's where you make the big money, is by doing nothing. You can win on a stock, but you cannot beat Wall Street all the time. He obviously figured that out. He made lots of money, lost all the money, then made lots of money again. And what I think he was doing was probably forcing things. And that's why he came up with that. It is what people did in the stock market that counts, not what they said they were going to do. So it's based off of the actions and the actuality, not what they said they were going to do. So I've got a chart here. You can see this thing sell off, and then you get this big, long accumulation phase, and you get these higher lows. This is the type of analysis that I do on the channel. You guys like this type of analysis. This is where we want to buy, right here before the breakout, and this is where they usually run quite substantially. That is Bitcoin, if you want to know. That was a Bitcoin chart. That's where you want to accumulate it, $4,100. I told someone at work, I said you should be buying this right in this area here between $3,500 and $4,000. And I don't think he bought any, but I said this is where I would buy it. I would buy right here. I did not buy it. I'm not really a crypto guy, but that's where I recommended to get it based off of the charts. The quotes here from Jesse again: I believe the public wants to be led, to be instructed, and to be told what to do. That's pretty true, and that's why you've got me. I'm here to help you guys and mentor everyone through the channel. Successful trading is always an emotional battle for the speculator. not an intelligent battle. And it's not based off of what you know, it's based off of your emotions. And you need to overcome your emotions as an investor and a speculator. If you can't sleep at night because of your stock position, then you've gone too far. And what I mean by that is, now this is from him. Now, there are a couple of reasons for this, and you must avoid it at all costs. Over-attachment to money and trading with money you can't afford to lose. Those two things. If you want to be successful, you have to get over that. The over-attachment to money and trading with money that you can't afford to lose. Do not get too leveraged up here. And do not use leverage. Leverage is for professionals. And you know what? Sometimes they get beat. If you're a new investor, stay away from leverage. We're here to ride this thing through, and I don't want you guys getting killed on margin. Another quote, remember that stocks are never too high for you to begin buying or too low to begin selling. That's his quote. Not taking the loss, that is what does damage to the pocketbook and to the soul. That is his opinion. I take my losses because I'm in very volatile things, and I position size it correctly. That's how I manage my risk, and that is my strategy. I trade my own information and follow my own methods, and that's exactly kind of why I'm doing a little bit different than his method in terms of selling a loss. I'm actually holding on to my portfolio, and I've bought certain companies that I'm not going to sell. If they're down 40%, I'm not going to sell it. I'm going to hold on because it's a exploration company. They're exploring. It's not something that I'm looking for earnings. I'm looking for a big hit. A little bit different strategy there. I don't buy long stocks on a scale down. I buy on a scale up. And what that means is you don't buy into weakness, you buy into strength. You never buy into weakness. You always buy into strength. That will make you a lot more money. The big Eric Sprott, the gold investor, he says the same thing. Never scale down, always buy into strength. Buy what is working. Trading is not a get rich quick scheme. So don't think you're going to get rich quick. This is about finding the trend, getting your trend right, and investing in it and holding on for that entire trend. Being a little late in a trade is insurance that your opinion is correct. So buying the breakout. You always notice we break a very large pattern, and I always buy the breakout. I'm buying into strength, and I'm buying it when the risk is the lowest. Never average losses. Never buy into weakness. Never buy down is what he is saying as a trader. I do that on some of the companies if you're in an uptrend. So you can go down, but you never want to buy into something where you're way down. Don't try to play the market all the time. He thinks that you should only play it when it's in your favor and when you have good patterns. Trade along the path of least resistance. Markets are never wrong, but opinions often are. A lot of people on YouTube, and remember, these aren't my quotes, these are Jesse Livermore's. The market is where I'm getting my data. The market, the inventory on real estate, the number of days of real estate, the prices going up, the interest rates, the dollar movements, the patterns that we're seeing in all these charts. We are looking at what the markets are telling us. YouTube has a lot of clips which are opinions. Opinions like the demographics do not support the real estate market. That is an opinion. And then they're going to try to show you data of why that opinion is valid. What I am telling you is that if they are saying that today, they are wrong. That opinion is wrong because the market is telling us that we have no inventory left and that prices are skyrocketing and homes go on the market for a very short period. I will change my opinion on the market when the market is telling me to change my opinion. I don't make up my opinion based off of data that isn't from the market. Everything that I make an opinion on is from market data. It's very difficult to take tertiary data and then try to directly link it and say, this is the driver of the data, because you don't necessarily know that. And remember, I never argue with the tape, which is the market. You never argue with prices going up and down. The market is right. Doesn't matter what you think, doesn't matter what narrative you make up, doesn't matter what narrative is attached to it from a news source or a YouTube opinion or anything. It does not matter. Don't argue with the tape. The markets are never wrong. And go with the data that you have that's in front of you. Trade that or invest in that. Invest in the patterns that you see. And if there's the fundamentals, future fundamentals are never, may not be 100% right. The ratios are right because that's from the market and it tells us where the money has flowed and where it hasn't. And you can use real-time data on a lot of these things. But be careful on using opinions or narratives to come up with a direction of where the market's going to go. That's a very bad game to play. His strategy, these are the 4 principles for his strategy. Trade with the trend, trade breakouts, ride the trend until it ends, and focus on the strongest markets. On this channel, you can obviously tell that I am very similar to Jesse Livermore. And this was a strategy that I developed over time myself. I'm trading with the trend. I'm looking for a downtrend turning into an uptrend. I want to partake in the uptrend. I'm trading the downtrend breakout, and I'm also trading and investing in companies that are breaking patterns. I'm buying the breakouts. I'm buying the retest of the breakout. I'm riding the trends higher until they end. And I focus on the strongest markets. The strongest market at the moment is probably the energy sector. That's where I'm focusing my efforts. So this strategy is basically the channel strategy is very similar to Jesse Livermore's strategy. And this is where I have found that you make the most amount of money. So why would I not adopt that strategy? Fundamentals are difficult. You really want to look at the technicals, and you can tie fundamentals into it, but the fundamentals of a commodity company change so rapidly that it's difficult to really even use the fundamentals for anything. You can just say, this is where the cost, the break-even cost is for this company. That thing starts to move over it, and then all of a sudden they just blow up. Their balance sheet goes berserk because they're making so much money when it goes over their break-even analysis point. If their break-even analysis is $50, and the price goes to $70 or $80, they are killing it. They are absolutely decimating it. And there's potentials where companies are going to make a lot of money in energy if oil gets above $100 a barrel, and their costs are $50 or $60. So I think the strategy has worked probably the best. I've migrated more from a fundamental analysis guy to a technical analysis guy, only because that's what works. That's why I migrated to more of the technical analysis side. If you guys like this presentation, please give me a thumbs up. If you guys have any questions, comments, put it in the comment section, please. And thank you for listening. This is Finding Value.